it's going to be a process that will take decades actually until we see everything being on chain.
Everything on chain is hundreds of trillions, right? So it's I think it's worth it.
He said, I think it's worth it. Hundreds of trillions. I mean, thank you, brother. Yeah, that's some deep stuff though, man. You just blew my mind with putting that all together. And yeah, let me just break this down and put it into a simple. Yeah, hold on, someone's calling my phone around. Put this into a simple form for everybody that maybe didn't understand that high level breakdown. But like basically, what Chainlink is a decentralized oracle network that plays a crucial role in enabling the functionality and expansion of decentralized finance applications. So basically, Chainlink is providing critical infrastructure to the DeFi ecosystem by offering secure, decentralized, and reliable data feeds, enabling automation, cross-chain functionality, and enhancing security for various DeFi platforms. So without Chainlink, DeFi applications would struggle to function effectively and securely in the real world. If you have DeFi lending platforms that need to know the price of Bitcoin in real time to avoid liquidations, the Oracle will fetch that Bitcoin price from multiple data sources and send it to a smart contract. The smart contract then uses that information to execute loans and liquidations. So in short, an Oracle is like the translator in helping smart contracts understand and react to real world data. And, Chainlink is at the forefront of that in DeFi. And as you had heard earlier in the breakdown that Cypress was running, Chainlink helped DeFi get from $100 billion to $200 billion, right? So that's major. And, let me just show you guys too, to take a little break. And let me just show you, the opportunity that exists in DeFi right now with your link. Like you can make passive income with your link, not financial advice, but this is stuff that we discuss inside Club 28. And then, we go over every week in Zoom calls. And we also have different breakdowns and step-by-step tutorial videos on dexes like this. Crystal, you can see my screen, right? Okay. Yep. So as you can see here, you can earn with your Chainlink paired up with Ethereum 133%, right? I mean, don't take this as going and chasing yield. I don't know, just firsthand looking at this, I would have to do a deeper dive, but I just want to bring this to everyone's attention that this is what's possible in DeFi right now. There's multiple different liquidity pools that you can be a part of, provide liquidity, and your Chainlink, aka your Chainlink, and earn passive income and grow your bag. So like this is what it's all about. And knowing this new information for me, I'm like, yo, Chainlink is definitely a part of my portfolio now. Like plays a major role in DeFi. Without Chainlink, we wouldn't even be where we're at today with DeFi. So
yeah, I completely agree, man. And then too, like these liquidity pools and that option, that yield aggregation platform that you just showed, right, Crystal? It's just like these are opportunities in the now, and things are only going to continue to develop in the future. There's a lot of people that are skeptical. I get it, right? The whole impermanent loss thing, and like the fact that DeFi isn't really heavily regulated, but neither is crypto. And at the end of the day, there are ways to mitigate your risk. For example, if you're afraid of impermanent loss, you could dabble into stable coins where you're not really dealing with the price volatility of the rest of the digital asset space because you're involved in stable coins where the prices are stable, right? You're more so focused then on just the APRs at that point and the price fluctuations in the APRs. But there is a way to mitigate risk. I myself, the vast majority of my DeFi portfolio, about 80%, over $24,000, I have embedded into stable coins, right? Other positions that I have are in some meme coin plays that are earning higher APRs, but that money that I'm making, which is about $2,000 a month off the VFAT platform, I take that money and then just deploy it into stable coins, or I take that passive income and I buy more digital assets with it. So it's just a constant flow of money, and it's all through the power of DeFi. And yet again, it's one of those things that if you don't know a lot about, or you're iffy or sketchy about it, just educate yourself. You don't have to go and deploy. You don't have to dip into your long-term bags. You don't have to risk your money. You just educate yourself on it, gain confidence, understand what you're dabbling into, and then over time, you will then get the confidence. You'll gain the education, the proper foundation, and a mature approach to get involved in DeFi. And we literally just showed you guys openly on stage, multiple financial participants or people that have a financial background telling you guys that DeFi is the forefront. I just don't get how people don't see it. And it's, again, due to lack of education. Most people don't even have a normal understanding of the financial system, one within itself. And then you involve this whole entire new crypto ecosystem, which over the past consecutive couple of years has been sketchy, right? Then you add a layer on top of that, DeFi, which is even sketchier if you don't know what you're doing. And it seems all kind of like iffy. But again, if you just educate yourself properly or join a community like ours, there's many others out there. I'm not going to knock them. Just do your research, take it upon yourself to join a mentorship program, learn, and then judge whether or not you want to get involved or not. Don't be the type of person that has no education and is like, no, I'm not going to get involved. Educate yourself first, then make a decision. See what I'm saying?
That's facts, dude. I quickly wanted to share this as well. You at the beginning of your presentation, the gentleman was talking about ETFs, and I don't know if many people know what's possible with ETFs, but again, not financial advice, but these are the yield max ETFs. This is a Bitcoin ETF that you can get through basically your Fidelity account, your E-Trade account, and multiple other platforms that offer this YBIT, this Bitcoin ETF. And as you can see, you can earn yield 62%, right? And that gets deposited directly into your E-Trade account or your Fidelity account. And, they have a scheduled date and the whole nine. But this is also other, conversations that we're also having inside Club 28, where we're sharing this information, sharing this knowledge. And, this is not, your common knowledge. This is like some real in-depth, like, like, oh my God, opportunity to build your bags, build your bull run bags, and get your digital assets working for you on many fronts. Because some people might say, hey, I don't want to get involved in DeFi because regulation is not here. Well, I mean, look at the other side. Then you can get on a platform that does have regulation like Fidelity and get the YBIT Bitcoin ETF. Again, not financial advice, but these are opportunities and conversations that we should be having, not just spreading the news like, oh, there's an ETF. Like, well, what's behind that ETF? What can that do for me? You know what I mean? So taking that extra step and educating yourself on these type of topics is king in this very moment right now, because in the future it's going to be more common knowledge and we won't see rates like this. You know what I mean? Probably 62%.
No, definitely not. Which is why it's so important to grow your wealth now. We've talked about this so many times, bro. It's like, imagine how many people are going to get wrecked in next bull market cycle because they take profit and they don't know what to do with that profit. They think that selling their digital assets for fiat and putting it back into the traditional financial system, like into real estate or opening up a business or whatever traditional investments most people know about, like, why would you do that when we're entering into a new digital era? Instead, learning how to, sell into stable coins, where then you can go and deploy those stable coins onto a platform, a lending or a borrowing platform, borrow against those stable coins while earning yield on those stable coins, and then redeploy all that yield bearing generated money back into the market when the market discounts itself again. But the whole entire time, instead of just holding fiat that's depreciating at a rapid pace, month after month, year after year, right? It just doesn't make any sense to me, bro. People are just sleeping right now. I just had, as a matter of fact, the Discord member, private member of the Wealth 28 Club, reach out to me today. He's actually one of our best students. Hopefully he doesn't mind me openly talking about this, but his name's Tanner. And he messaged me this morning and said that he's set right now to start to generate about $80,000 a year in DeFi. That's insane. Now, obviously, of course, he has a significant amount of capital deployed, but it just goes to show that you can literally replace and supplement your income right now that you're earning with most likely the bags or the digital assets that you're already holding. And that's monumental to see. 80K a year off digital assets, that's retirement talk right there. you know. So
shout out Tanner, bro.
yeah. But anyways, yeah. So you wanted to play some other video clips of Sergey, right? You had something from the Singapore video, and then you had another one from, who was the gentleman that you was talking on stage with, the Aave CEO?
The Aave founder. Yeah, the founder of Aave. So let me share this video. This one was he's just talking about, again, real world assets, but then the amount of money he says is going to come in is what like really caught my attention. I'm just like, he's talking about hundreds of trillions of dollars. This guy said this a few different times now, but let me tap in here and we'll listen to it. I think it's let me see here. How long is this?
Before you play that, like, keep in mind, right, that him saying $100 trillion, I feel like it's not. Yeah, okay, it's a personal opinion, but why is it his personal opinion? Look at who the DTCC partnered with or look at who Chainlink partnered with back in May. They literally partnered with the DTCC. That processes quadrillions of freaking dollars, ladies and gentlemen. Like, you're not going to see somebody like this make these type of predictions for no reason out there, but they're saying it for some type of reason, whether it was they were sitting in on a private discussion or a panel or some type of back-end meeting where those types of numbers were configured. And he's just projecting that information based off of the education that he's been bestowed upon. You know what I mean? So it's like, I'm just saying,
real.
That is.
Yeah. And then in this clip, he kind of goes into like how long it will take. The clip is actually from 14 minutes to about 18 minutes, but well, just tap in, you'll hear it.
I feel now we'll get to a world where there'll be very high quality sources of diversification of the yield through various RWAs. And DeFi is secure and reliable enough to accept even more capital than 200 billion. But we're not there until kind of the yield comes back, right? So if the interest rates go down, if the backing behind DeFi gets diversified enough with good RWAs, and if the security assumptions and the methods and the systems and the Oracle networks and the contracts and the block space and all of these kind of technical assumptions hold up, then I can see it going from 100 billion to 500 billion to $1 trillion. And then that 17 billion gets another zero next to it or more, right? That's kind of the world that I think these systems should really be built for. It's not even the 17 billion. I think it's, can this system handle 170 billion based on how it manages risk, based on, you know, the dependencies it has technically, based on how it operates, because that's kind of the, I would say, the next stage of DeFi, in my opinion.
And it's actually fascinating that, like, what I like about the most recent trend.
Hey, can you pause it right there?
Yeah.
I don't want to lose pace on some of the important things that he says as we break this down. Do you guys remember a couple of lives ago that myself and Mr. Aqua did, where Paul Brody, the global blockchain lead at EY, literally mentioned, remember EY, right? Major consulting firm, one of the big four. He mentioned from his perspective that one of the things that was going to create this institutional wave of adoption was when the interest rate environment changes and large financial institutions are running around trying to figure out where to park their capital to earn higher yield. And Paul Brody mentioned how big the market is. He mentioned trillions of dollars, and he literally said on stage, it blew my mind. We played this video clip. I can play it after this if you guys want to hear it. He mentioned that from his perspective, he thinks that a very large portion of the multiple trillions of dollars that are sitting in traditional finance is going to come on chain in DeFi, because these large participants, they're not going to be interested in traditional investments anymore because we're heading into a low interest rate environment. And they're going to be seeking yield. And what did freaking Sergey? I'm telling, man, we're dropping gems here. Go ahead and play that, dude.
And this guy right here is the founder of Aave with the Aave hat on. So just heads up, everybody.
DeFi and even like what Aave benefits from is that we see kind of like teams looking ways to bring yield on chain, and that's really cool because essentially, like, when people are looking at the space today and they're seeing like a lot of stable coins popping up and stable coins being at their peak, and we should remember that like we have few stable coins that are quite well capitalized in crypto, and they fulfill the purpose of like just enabling stability. But if you look more closer, like there's a lot of yield that is actually not coming on chain because of these bigger stablecoin issuers. They're pretty much keeping everything, right? And now you have like second generation of, well, not second, but like a new generation of stablecoins that are thinking of like, hey, how we can actually share some of this yield with the users, with the protocols, with the infrastructure providers, and make it a little bit more fair. And it's quite fascinating, actually. Like if we can even turn that switch on, we get much more yield into the ecosystem, and that creates a lot of interesting opportunities. And going back to stablecoins, it's really interesting because it's very. We have to remember that half of the world doesn't really have access to, let's say, dollar. They don't have access to the direct dollar. Not even speaking of dollar yield. So just from like an accessibility point of perspective and equal financial opportunities, that doesn't exist everywhere. I mean, obviously, the whole financial system is kind of like broken anyways, because like, you know, you have the banking, you have different margins for different people, regionally, a lot of differences, things that shouldn't exist in a software world. So let's say if finance is software-based environment, a lot of the stuff should actually disappear, and should be like pure, you know, there should be very minimal arbitrage. And now the biggest arbitrage is that, you know, who is early here in the space, you know, who can actually create some of these primitives that will be used by everyone. And it's going to last for quite a long time, because turning the whole finance on chain and pushing more value, pushing more yield, and tokenizing a lot of these real world assets, funds, and you know, it's going to be a process that will take decades actually, until we see everything being on chain.
Yeah.
Bro, that alone right there should give everybody a long-term perspective. Like, if you think this next bull market cycle is the end game, you're so freaking wrong and misguided. It's not even funny. That's why, yet again, I try to stress to the CYPRX community that the next bull market cycle should be, at least from my perspective, profit taking to figure out how to deploy that profit into yield bearing assets, or assets that are going to generate you income, so that way you can redeploy in a market downturn to continue to grow your bags for the 2030 agenda and beyond. Like, don't think that this next bull market cycle is going to be the one where it's like, that's it, I'm done, because
No way. No way. It's
Can you imagine, bro, selling before 2030 and then like hitting 2035 and seeing everybody that didn't, and just, wow. I'd be embarrassed, honest to God, to be like, yeah, I was in crypto in 2024 and I sold before 2030. Now it's 10 years later, and I'm looking back like, what was I thinking? What was I thinking? Man, wow. Anyways,
yeah.
so I had to cap on
We're at
that.
the forefront of this growth, man, and it makes me feel. I felt great when I heard that. I was like, dude, there's the long haul, you know what I mean, in this space, and that's what I'm all about, because I have a passion for all this stuff, and I'm not trying to leave in 3 or 4 years. So, you know, decades long to grow. I'm going to be here for all of that growth. Period. So
100%.
yeah, that was it on there. He had said 100. He said hundreds of. Hold on, let me just finish this clip. He might have said it here. Hold on 1 second. Let me just see.
Everything on chain is hundreds of trillions, right?
There we go. Did you hear that? Everything on chain is hundreds of trillions. Hold on, let me run that back for everyone.
You know, it's going to be a process that will take decades actually, until we see everything being on chain.
Yeah. Like, everything on chain is hundreds of trillions, right? So it's I think it's worth it.
He said, I think it's worth it. Hundreds of trillions. I mean, and again, I'm going to take this guy's word for it. His resume speaks loudly where he's at, what he's doing. I can respect this man's opinion, period. So
yeah, I want to just to end it off, because of what they were talking about yield and, you know, low interest rates and how that will drive institutional adoption and search for yield, right? Well, Paul Brody, again, the global blockchain leader at EY, shares the same perspective. So I just don't think that it's a coincidence that these high-end individuals, or at least these people that are sitting in collaborations and you know, tests with the DTCC like Chainlink are freaking making this stuff up out of their butt. It's clear as day that something's happening behind the scenes. Now, again, you're going to have to stomach the short-term volatility. You're going to have to generate a long-term game plan, and you're going to have to figure out how to pay yourself in the now so that way you can survive long-term. Like, a lot of people don't even understand that they're not going to make it that long because they can't even keep up with their everyday living expenses and their everyday needs because they've overexerted themselves by investing too much. And it's going to make them skeptical. It's going to make them emotional. It's going to make them jittery and sell when the markets are low because they're too fearful to lose more. Like, that's another powerful tool that DeFi implements, is your ability to control your emotions. For example, every single day in the Discord, literally over the past consecutive couple of months, because the crypto market has been consecutively declining month after month since March of the beginning of this year, I see messages in the Discord or in the Wealth 28 Club where people are like, dude, who cares if the market's downturn? Because it doesn't matter. We're still earning, you know, it doesn't matter. We see this as just another opportunity to deploy, and we're still earning APRs on our digital assets. So who cares if XRP is 58 cents, because we're in pools that we're generating passive income on our XRP or on our stable coins or whatever. So it literally alleviates this perspective. DeFi alleviates this perspective or this care for instant gratification, because through the utilization of DeFi, you are being instantly rewarded every single second of every single day. If I went to my VFAT DeFi position right now, which has about $3,000 in it, there's probably like $50 for me to profit take today. And I just pulled profit yesterday. You know what I mean? $50 a day, and taking that $50 and either putting it into stable coins or buying more XRP or buying more Link with it or whatever, it fixes my instant gratification. So it like creates an environment for you where you're less really fixated, especially if you're not a day trader, on the current market environment, and it allows you to really zoom out and keep that long-term perspective, right? Eddie just mentioned, I have no clue what DeFi is. This is a prime example of what I'm talking about, my friend. Take it upon yourself. Myself and Mr. Aqua created, I know that there's a paywall, right? Oh, you got to pay $28 to join our program, but that's literally because there is hundreds of hours of course material that myself and Mr. Aqua sat down and curated for you guys, exposing our own capital, recording all that for you guys step by step, so that way you don't have to go do the YouTube search, or you don't have to go to untrusted sources or people that might be lying to you or trying to take your money, and you can just watch a course that takes you from A to Z, step by step, literally holds your freaking hand for you and teaches you this stuff, right? And then not only that, you're embedded into, you know, the community where you can ask questions. If you want to take it upon yourself to branch out further, myself, Mr. Aqua, we host weekly Zoom calls. I host a Zoom call every single day. Mr. Aqua once a week, right? I mean, it doesn't get any better than that. And it's not like we're sitting here charging an arm and a leg. Yeah, it costs a small fee, but that's because time is money, right? I mean, at the end of the day, you know, and it's respectful. It's very respectful. If you respect what myself and what the rest of the CYPRX team does here, $28, ladies and gentlemen, is an embarrassing amount for us to be charging, honest to God. But it shows that we're not here for people's money, right? At the end of the day, we're here to educate you guys. We're here to show you all that we are at the forefront of the digital transformation, and that this stuff is unfolding at such a rapid pace. Man, let me tell you what, looking back 5 years from now, it's going to be crazy to see how many people, even in my own circle, because there's people right now in my family that know what I do for a living, that I trade the financial markets, or that I invest in, that I'm a multiple six-figure entrepreneur, and they still think that crypto and trading is a scam. And I can't wait to look back, not to be spiteful, but in 5 years from now, when this stuff continues to unfold, and just be like, look, y'all, I told you so. I told you that y'all were going to be on universal basic income, that they were going to usher in CBDCs, that artificial intelligence was going to replace a large amount of jobs, and that y'all should have got hip. But, you know, like, it's just, it's,
You even got a course. You got a course.
So anyways, let me play this video clip real quick of Paul Brody, just to reiterate what Sergey said about yield, and how when the interest rate environment shifts, that these large financial institutions, because obviously, of course, they're profit-bearing organizations, they want profit, they want to make money, they're going to be in search of what's going to pay them the highest yield. And DeFi is it's the wave. It's the new wave, y'all. I'm telling you. As you heard Jenny Johnson on stage just a couple of seconds ago, I played the video. She even mentioned that regulators are going to be interested in getting involved in DeFi. And what did Mr. Aqua show you guys like months ago? A freaking congressman buying up Velodrome, which is a digital asset that you can go and deploy on a decentralized exchange to start earning yield on. Like, this stuff all makes sense, man, if y'all are tapped in. So listen.
I believe my theory for that is just my theory. My theory for that is that one of the reasons is we are in a period of higher interest rates, right? So why take the risk of putting something in DeFi, because it's still relatively more risky, when you can get 5% or 6% in a traditional bank account. I personally, my own forecast is that that is not a situation that's likely to last, right? Central bankers have promised us interest rates will come down, right? But I think in general, I probably do not agree with people who say that low interest rates, like 0 and negative interest rates, were a temporary phenomenon, right? And my favorite example of this is this fantastic chart from the Bank of England. It's interest rates over the last 700 years. Right? You cannot accuse me of not having a strategic long-term point of view. Right? And this is also the chart I show our leadership when they ask, when are we getting a return from our investment in blockchain? That's actually not true. If I showed this chart, I'd be doing this pitch out on the grass outside. But what I would argue based on this data is that there are good reasons to think that 0 interest rates or even negative interest rates are going to become the norm in the near future. And I think it has to do, and this is my techno optimism, I think it has to do with the fact that we are eventually going to become a post-scarcity society. We're already post-scarcity in a number of ways that we don't really like. There's an unlimited amount of scrollable video out there, right? I know this because my children are attempting to get to the end of TikTok. They haven't succeeded yet. But I think, as interest rates do eventually come back down, the search for yield is going to go back into overdrive. And then I think that's going to bring back DeFi with a vengeance. Secondly,
You're muted again, brother.
Yeah, I got you. Yeah. So, I mean, he said it, not me. This is the global blockchain leader at EY talking about DeFi. I wonder why. I and so should everybody else listening to this call. Before the trillions of dollars that these individuals are projecting to flood into this space actually flood into this space, don't you think you should be at the forefront of that? Or do you think you should be involved after all that money comes? I would not want to be the type of person that's involved after. Just saying, again, not financial advice. Anyways, yeah, man, Mr. Aqua, brother, that's all I got today for today's breakdown. I think we slammed it, bro. Slammed it.
Yeah, likewise, brother. I'm pumped with this link though, bro. I'm about to be buying this stuff every single day. So
110%, man. As always, you guys, ladies and gentlemen, many blessings to you all. Thank you all so much for tapping in today. 500 listeners. Really do appreciate you guys. If you are one of my followers, go give Mr. Aqua a follow on YouTube and X. He's always dropping good, valuable information. And if you're one of Mr. Aqua's followers, do the opposite. Come tag me up on X or on YouTube. And then moving forward, again, we had a lot of people question about the DeFi ecosystem, what it is, how to learn about it. You guys can head over to CYPRXtrading.com. There is a course there for you guys that literally takes you from A to Z. I'm not even exaggerating now. I could count probably, but I probably overshoot it. But there's well over 100 videos. What would you say now that we've consistently uploaded every single week since we created the course? There's well over 100 videos, right?
I would say 200 videos for sure.
Yeah,
there's a good amount in there.
So, and you guys have direct access to that if you want access to it, if you want to learn about DeFi, and if you are a Well 28 Club member and you find the course of value, which I can almost 110% guarantee that you will, because we have not yet got one negative experience or review, which is just crazy to me. Share it with a friend or family member, share it with another interested individual that's like, I got all these digital assets sitting there collecting dust and doing nothing. And instead, teach them and show them the way on how to start earning and maximizing your wealth and your digital assets in the now. I cannot stress enough that the people that are not stagnant, the people that approach this, industry, the DeFi ecosystem with a mature approach and not a get rich quick mentality, you guys will be the ones that come out on top. So with that being said, Blessings to you guys. Hopefully you all enjoyed today's content, and we will see you guys next Friday. Everybody take it easy.